What's going on, guys? Welcome to module number 4 in this day trading course. I will be showing and teaching you how I use support and resistance levels, how to find them, how to draw them, what to look out for to spot reversals on the S&P 500. So before we get into the charts, let me just go to the slides and cover a few key points. So point number 1, support and resistance is just an area where price reacts from time and time again, over and over, right? Point number 2, it is a general area. It's not just a line. Many people draw just support and resistance with a line. Yes, this could work, but you have to understand that the market works in ranges and it's not just one price level. So it's usually a general area of support or a general area of resistance. Now, the timeframes that I use to validate these levels are usually the H1, the M30, M15. On any of these three timeframes, obviously you can see them quite clear because you can only really draw and validate the good ones where it's just so obvious that it's support or resistance. So any of these timeframes are good. You can always check, of course, three of them just to see, maybe on the H1 you'll find a longer term support or resistance than on the M15, right? But since we're day trading and scalping, I found these three timeframes to be very helpful to look for these levels. Now, point number 4, which is very important, most of the time, so usually I wait for a sweep or a manipulation of the resistance highs or support lows. Now, there are a few exceptions to this, and I will head to the charts now and show you some examples. So let's head to yesterday, for example. Yesterday on the S&P 500, we had a very small tight range in the pre-market. As you can see, the market was very choppy, very rangy, moving in a very small range of 11 points, just under 11 points. So you can clearly see that we have this resistance level. If you even go to the line chart, you can see it clearly as well, which is what I use as well. The line chart is very helpful for that, just to spot clear levels of support and resistance. Because sometimes the wicks and the candles can make it a little bit clustery for your brain. That really depends on how your brain works, to be honest. But switching between the two, cuts out a lot of the noise of the candles, and you can clearly see where the support and resistance is. But anyways, we had this clean resistance level here with the pre-market high being right here. Let's just mark a line right there. And the support level, you can see how price just reacted off multiple times of this price range, and we had the low right here. So as the market opened right here, I was waiting for a sweep first of the pre-market high. This range is so small, okay? It's 11 points, this whole range. So there is a very big chance that if price comes back to the resistance level, that it will take out this pre-market high, okay, which is also the resistance high. Now, you can see that we had also the highest point of the previous day, which was all-time highs at this point. We had it right there. So, if you really want to be super careful, you can also wait for a sweep of the all-time highs. But for me personally, it's not necessary as long as I see a sweep of any clear high, which was the pre-market high and also the high of this resistance, then I'd be willing to look for shorts. And then obviously I go on to a lower time frame and then I try to find entry confirmations, with which I will cover in further modules, very in depth on how to spot entries in these areas and how to capitalize on these moves. Now you can clearly see a beautiful sweep and then the actual move happened. Yes, it took a while. We're on the M15 time frame. It took a couple of counts to see an actual big downwards move, but that doesn't mean that you cannot capitalize on smaller moves already in this, because for example, I entered in this candle right here and I caught a nice move down of about 8 points. So with a 2-point stop loss, that is still around 4R. I actually have a trade breakdown that I released on the YouTube channel of this exact trade, so I recommend you guys check that out. Now, as price came down, my idea for this pre-market, well, for the market session, my pre-market plan was, if the market would go up and first head to the resistance, I would wait for a sweep of the pre-market highs. But if the market wouldn't have gone up and would go down, I would first wait for a sweep of the pre-market lows. Now, I'm usually not going to enter just the first time that the market enters my support level. If it's such a tight range, generally you will see a sweep of the lows or of the highs before an entry. And as you can see, the sweep happened in this candle, where you could have tried and find a long opportunity, Now this obviously might have ended up in a losing trade, depending where your entry is and depending how small your stop loss is and what your break-even rules are, etc. This obviously wasn't a nice move to the upside, so this trade wouldn't have worked out. That's just part of the game. So this is two clean examples already of sweeps of the pre-market highs, the pre-market lows, or the support lows and the resistance high. So let's look at some more examples. Right here, we have a support level that has been created during the market session. You can see this low right here, this low right here, and then where does the market finally react from after a sweep of this support low. You can see how the market came into this level, didn't show any reaction first, and once it swept this low, then finally there was a nice upwards move. And this might not look like a big move to you, but after you see the sweep and maybe you find an entry confirmation, you can still make very good gains on a 14-point rally. With a 2 or 3 point stop loss, you can have a great arm multiple trades. This would be another example of a sweep of a support low. So let's keep looking. This is also another trade that I took some time ago, about a week ago. We had clear pre-market resistance. As you can see, we had resistance here. It came back up to the level, again resisted that same area again, and then as the market opened, it came back to the resistance. Now you can try and find an entry if you want in the first candle already, and as you can see, it had some reaction, right? Not the biggest. So let's say you enter right here, you have about 6 points, 7 points, which you can still have a great scalp and a nice quick trade, but that is usually not going to be the bigger move. So what happened in the next candle? The next candle went all the way up, swept the pre-market highs or the resistance high, and you can clearly see how then the actual move started happening to the downside. So again, it's just all about manipulation. It needs to sweep certain highs, and in this case it was a pre-market high, which is a pattern that happens actually quite often, and this is where you will find your best RR and high probability trades. As you can see, again, very similar to what happened yesterday. It swept the pre-market highs. The pre-market was quite a small range, and then after that, well, we had a nice reaction to the downside. So let me show you guys another example that I have marked here on the charts. So here, for example, we have this support level. It is, well, originally it was a small demand, and then price reacted of it right here. So you can see it came in, reacted of this demand, creating this a support level, because this is not a fresh demand anymore. As you know, we usually look for fresh demand and supply levels, as I mentioned in previous model. But once this level is respected again, then obviously it becomes a not freshly demand anymore. It becomes a support level. So then ideally you just need to wait for sweeps of the lows. And as you can see, the market came back to this level again, didn't sweep this low, didn't sweep the demand low or the support low, and nothing really happened here in this move. Then price came back down and then swept this low, swept the demand low or the support low, and then had a reaction of it, came back down again, entry confirmation probably somewhere around here, which is obviously a late one. I wouldn't be trading at these times, but the pattern still is there. So then again, a massive move and a massive rally happened to the upside from this area, over 20 points. So you can for sure capitalize on moves like this. Okay, and this is actually another trade that I took of this resistance. Again, the same thing. We have the pre-market and a tight range. We have pre-market resistance right here multiple times that it has been resisting this price level. And as you can see right here, the last candle of the pre-market already swept these highs. So then again, what I would look for is you have this resistance drawn. I would still wait again. If I want to short from this level, I would wait for a sweep of the pre-market high. Okay, and then I would start looking for shorts. And this is exactly what happened. So the market opened, swept the pre-market high again, and then had a nice reaction to the downside. If you find an entry somewhere here, just in this candle alone, it was almost 10 points, 9.5. So with a 2 or 3 point stop loss, you can still get a great trade. Okay, so it is very clear if the pre-market is very rangy, creates clear resistance or clear support, that it's always just safer to wait for these sweeps. Okay, wait for the sweep of the support, wait for the sweep of the resistance, and especially the pre-market highs and lows. If it's in such a small range, is very important to look out for. You can see it happen time and time again. Obviously, this is not going to happen every single day. Every single trading day is different. Sometimes the pre-market is more uptrending, sometimes it's more downtrending. As of now, it's a little bit more to the uptrending side, as everything is quite bullish. But if the pre-market is in such a tight range, like it was here, for example, then these are just great trades to be catching, and especially within the first like hour of the market open, 30 minutes to 1 hour, if it sweeps the pre-market highs or the pre-market lows and it's a clear resistance or support level and it's just a very small range, then there are big chances for a big move like this, such as what happened yesterday, a massive sell-off. And even if you were trying to long, for example, after this sweep, that's a good loss, right? It's just part of the game. You cannot have 100% win rate. It just doesn't exist. You can improve your win rate and always try to refine it and make it better, but you cannot have 100% win rate. So this is just part of the game. This would be a good long, so it would be a good loss. But obviously the first setup was right here after the sweep of the pre-market. All right. So anyways, I hope this video made it clear for you guys how I look for support and resistance levels, what to look out for as well, and what to wait for, which is very important to avoid potential losses. And thank you for watching, and I will see you in the next module.